Hello everyone, this is Matthew Frailey, founder of BreakpointTrades.com. In this video, we're going to do a midweek technical analysis review of the markets and our trading systems. And we're going to have 6 table of contents. Got quite a few items to discuss. Again, my name is Matthew Frailey. I founded Breakpoint Trades 21 years ago in March 2003 to provide the most advanced technical analysis on the planet, advanced trading systems, which are my passion, market analysis, trade ideas, have an active community, etc. Again, happy holidays, everyone. Hope you had a wonderful Thanksgiving. Again, back to this video at hand. By the way, this is our backend recorder for our website subscription service. I'm going to get that recording started right now. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, December 4th midweek update, technical analysis review of the markets. Hope everyone is having a good week. Hope you had a great weekend. Again, this newsletter is divided into 6 major sections. Going to review a lot of the same charts I did on Monday. And again, as far as the market this week, as you know, guys, the uptrend continues. We're in the holiday mode. All time frames. One thing we discussed on the weekend was the big cap tech needed to start to lead, and that's what they've been doing this week. It's really been the big cap tech that's been leading the market up here this week. In fact, the breadth in the market's been quite weak because with a lot of the sectors down, again, shows you how much weighting those big cap tech stocks have. Tech-wise, we're likely in some sort of wave 3 on the S&P. Maybe we'll get a wave 4 pullback later this week or next week. Again, don't overthink it. One thing I will note, the VIX, that's the volatility index, closed up today along with the S&P. Sometimes you get a reversal after that, so take notice of that. And again, we're still running that Black Friday special all week. It's Black Friday 24, all caps, to receive 20% off the KISS subscription, plus an additional 2 months for a total of 8. That's about a 40% discount. Quite a few of you already signed up, but again, that is still active if you haven't taken advantage of that yet. Okay, let's get started here. And before we get back to the general market, let's talk about some items I've discussed recently. So here's an educational item I discussed. So a lot of info here, but at the top left here, you have a 195-minute chart of the triple Qs NASDAQ. That's the half-day chart. If you're wondering, there's 390 minutes in the cash market daily charts. Anyway, the dots here, this is our cycle indicator. And we show it in all our newsletters. It's in a lot of the TradingView charts that I've shared publicly. But anyway, it's an indicator that's sort of like an Elliott wave type thing. It's pretty cool. And one thing I pointed out last week, and I talked about on a Monday, was whenever price starts following the cycle indicator, ping-ponging between the cycles. So the cyan cycles, those are your support cycles. The magenta, that's resistance. You can see how the triple Qs were bouncing off support cycle, stalled at resistance cycle, bounced off support cycle, stalled at resistance cycle, bounced off support cycle. Whenever you see that behavior, that has me on notice, because generally once you finally then close through one of the cycles, let's say to the upside, it's a breakout. And so far you can see that was a breakout, and that's been signaling an uptrend. You can also see an example here on like a 5-minute chart. You can see price ping-ponging between the cycle, then once it finally broke the cycle, that actually signaled a wave 3 breakout type condition. And I have over here, again, if you're viewing this on YouTube, you would need to pause it to read. If you're a subscriber and you're looking at our standard webpage newsletter, it shouldn't be an issue. But I discussed the cycle indicator, how to use it, anyway, you can see whenever my diagram here, whenever you break through a cycle, typically signals some sort of wave 3. Okay, and when price is ping-ponging between the cycles, that tells you're in a consolidation wave. Pretty useful indicator, but I just wanted to do a quick follow-up on that because I discussed it in the last newsletter and video. Now, moving on to the mechanical systems, image number 3. So we still have the open SPY breakout system. Okay, these are the live SPY mean reversion systems that we've sent out to our subscribers this year. There's been 25 of them. Again, they've been not as active this year because the market's been on a really good uptrend most of the year. They're a lot more active during high volatile years, bear markets especially. 2022, that bear market, these did over 90 trades that year. So just give you an example. They're more active in volatile years, but they still produce some trades here, and most of them have been winners, as you can see. These are all live trades that are sent out to our subscribers. We still have this open breakout system, which took a first and second entry. You can see the image here on the right. It did scale out of 50% of its position last week, but price continues higher, and nearly every day this trailing stop is being raised on these open positions. Okay, so the SPY stop moved up about $1 today. SSO moved up about 30 cents or so. And you can see these trades have been active for 27 days for the first entry, 19 days for the second entry. Again, if you're a subscriber, Breakpoint Trades, and you did this, you're in this last trade, easily paying for your subscription, more than paying for your subscription. And obviously, if you did all of them this year, you've done well. And again, this is such a tiny spot on our website, with all our other systems, our KISS systems, our trade ideas, our market analysis, you name it. But anyway, breakout system continues to do well here, just following the trend up. Now moving on to the high performance systems, this table shows you the KISS high performance systems. Again, quite a few of you signed up for the Black Friday using the Black Friday coupon, but you can see these open trades, really nice trades on the systems here. Here's a Bitcoin ETF, IBIT, it's up almost 57%. Previous trade it lost 2%, but this trade it's up 57% from the October 11th entry where it went long. And its current stop, STS, we call it Smart Trailing Stop, is 47.50. Okay, there's been 13. The system has raised its stop, trailing stop, 13 times since entry. GBTC, it's another Bitcoin type ETF. Tesla, which has been on fire. Elon's been out there a lot. And anyway, we have two Tesla systems, a 78-minute, a 130-minute, and they're up 40.7 and 38.4% respectively. Again, these are all live trades, guys. These aren't back tested. They've been on the site all year. Anyway, congrats for those of you who've been into these trades. And image number 5. So here's an example, and I showed this in the last video. These are real. So subscribers to this KISS system, they set favorites, and in the standard KISS system, it sends them an email each day. There's an update to their favorites. So these are real subscribers. This guy, number 483, again, not showing their email just to keep it anonymous, but you can see this guy's favorites that were emailed to him today. You can see the ones in red are systems that his favorites that closed out. ERX closed out with a 4.3% gain. It was a small gain, but still a gain. These two, UPS, ExxonMobil, closed out with about a 4% losing trades. Again, keeping those losers small. But look at all these awesome gains here. Exxon, 87%. Affirm up 29%. These are all his favorites. And if he's in a bunch of these, he is killing it. And here's, again, this guy's got a lot of favorites, obviously. Here's some other guys. This guy, this was what was emailed to him today. And even these are up nicely. The Costco, his favorites up 18.2%. This other guy, you can see what he has. The Tesla trade, UPRO, stuff like that. So those are some real examples of emails that folks get daily who are subscribed to the KISS system. And finally, guys, this is for those of you who are subscribed to the KISS system. I added RSP. That is the equal weighted S&P 500 ETF. So as you know, or may know, the S&P 500 stocks are weighted in it, and that can skew the index many times. Some of those big cap tech stocks that dominate the percentage, the weighting, but the RSP is equal weighted. So I added this to the website, high performance per request. And so you can see the stats here. Average time in trade around 11 days. Winning trades 18 days. Losing trades is about 4 to 5 days. So it doesn't stay in the losers very long, holds the winners longer. But here's the yearly statistics. RSP versus buy and hold. And you can see this year it's up similar to what buy and hold is. It's up 20.8%. Buy and hold is up 19.2%. So it's pretty close on 13 trades. Max drawdown, though, only 2.6%. Max drawdown buy and hold isn't too bad. Again, it's been a not that volatile of a year. So 2023, the system made 21% versus 11.7% for buy and hold. So, almost double that year. And only a 2.9% drawdown versus a 14% for buy and hold. So that's much better. Again, and also where it shines is in bear markets. 2022, the bear market only was up 7.8% on a 2.9% drawdown versus buy and hold down 13.2% with a 24% drawdown. It's quite a bit of difference, right? Look at 2020. System made 58.9% on 23 trades. Buy and hold made 10% and had a 40% drawdown. A 40% drawdown, guys. Think about that. I can't handle 40% drawdown. Not psychologically. KISS system had an 8.35% drawdown. That you can handle. 2008, system was up 14%. Buy and hold was down 41%. And here's the averages. So the average annual gain on the KISS system for RSP is about 19.5%. Buy and hold's about 10%. So roughly double. But again, where you really see the difference is the drawdown. Max drawdown only about 3.3% on the KISS over the history. The average drawdown, buy and hold, average of 18. So you're looking at six-fold less drawdown on the KISS system. So there you go. Again, I just added this on the weekend, so I'm not sure if you guys noticed that, but yet another addition to the KISS systems. Okay, enough of that. Let's move back to the general market newsletter at hand. Like I said, we're in the holiday mode, so we're going to try to go through these charts fairly quickly. So this shows the index sector table, what transpired today and this week. You can see major indexes are all up for the week with the NASDAQ tech area clearly leading. As I said, the big cap tech have been leading this week. You can see for the week up quite nicely, 2.7% versus say 0.9% for the S&P, and the Russell's down. Now, as far as the 21 market sectors, like I said, breadth has been a little negative this week. You can see most sectors are down for the week. Okay, again, the gains are concentrated in the tech area with technology, semiconductors, stuff like that. Currency-wise, US dollar up 0.5% for the week, flat today. Bitcoin up nicely today, up 2%, up 0.5% for the week. Commodities, kind of a mixed bag here, mostly to the downside. Again, crude oil was down today, DBC, most of these were down. Precious metals were up a little bit, gold up slightly, silver up 0.9%. Now the GDX, the miners, was down 0.3%. So stocks are lagging there a bit. And as far as the bond market, nice pullback in the 10-year, 30-year Treasury yield today. Yield curve, of course, is still non-inverted. Next, item number 8 shows the economic news calendar. Tomorrow will be on Thursday. We have initial jobless claims, natural gas inventories. Obviously, the big one will be on Friday, December 6th, the non-farm job payroll report. We'll see where that comes in. Last time it was 4.1, forecasted now to 4.2. Again, I expect this to tick higher over time. Trump is going to be dealing with that. It's not his fault, but he'll be coming into that. I mean, from my charts, the unemployment rate is showing that it's starting an uptrend. Okay. Again, I'm not showing that chart tonight, but just making that comment. All right, let's go and jump to the charts. So looking at some of these big cap tech stocks, here's Meta. It's been on our watch list. Last week we had a little resistance zone right around this 580. And this was a bullish pattern, expanded coil. Anyway, started rallying on Monday, broke out of that resistance. Yesterday broke out of the pattern, and it's been up nicely. Chart 10, here's Microsoft. Last week I was commenting about it, needed to hold that support, which it clearly did. Then Monday it took out a little resistance. Today, slightly taken out the trend line of this coil pattern. Here's Amazon making a new high here. There is a MACD divergence setting up now, but again, you can clearly see the techs have led this week, while most other sectors have not, have lagged. Here's NVIDIA. Now, NVIDIA did bounce off this little demand zone right around that 50-day moving average. There was a bigger demand zone here I talked about last time, but it held this first demand zone. It's now retesting this channel line. We'll see if it can pop up through there. If it stalls, there could be resistance. Okay. All right, so let's go and move to the indexes. So image number 13, this chart shows you the 5 key major indexes. Again, we've been up this week. Notice the IWM small caps, they're lagging here a bit, though I wouldn't be surprised to see them try to rally again sometime this month. They usually do well late in the year. But otherwise, you can see NASDAQ and S&P all closing above their upper Bollinger Bands. But one thing to note, notice how the Bollinger Bands are pinching here, okay? So we got to keep an eye on this. It means energy is building. Next, moving on to the S&P 500 charts. Here's the S&P 500 daily KISS high performance system. Again, no changes. Smart trailing stop still remains at that 57.95 area. Note though, we got a DeMark 9 here today. Now again, sometimes you get a DeMark 913 combo before you get a pullback. You can see we had a bunch of them since May. And every one of them did produce some sort of pullback. We had what, 3, 4, 5 in a row. Then the last time in October, we had a little DeMark 9. We had a little pullback there. Now we have a DeMark 9 here today. So that is definitely something to notice. We are on the lookout for a fourth wave pullback here at any time. So just take note of that. And with a negative breath. And the VIX that was up today. Here's the 4 time frames. Again, really not much to say. You can see the DeMark 9 up here on the daily. Otherwise, ATR is support on all these time frames, even down to the 78-minute. Next, number 16, here's the weekly S&P. Like I said, it's up 0.9% this week. You know, this shows the bigger picture. We've been in this uptrend channel since 2023. Chart number 17, here's a daily chart of the S&P. This shows you that potential bullish 1-2-1-2 count that I've been showing for quite a while. So under this count, we'd be under some sort of wave 3, and otherwise you can see the channel, etc. Okay, don't want to get too complicated about it, but you know, we're been uptrending here, and it appears we're in some sort of wave 3. Chart number 18, here's another chart. This is a half-day chart. This would be a less bullish count. This would be, again, the alternative would be the bullish 1-2-1-2 count. But even under this less bullish count, we would still be in some sort of little wave 3 here. Soon we get a wave 4 pullback, then another move in a 5. And that could complete some sort of, that could complete this move, and then we get a bigger correction. So just be aware of that. We are setting up some MACD divergence there. Chart number 19, here's a 60-minute chart just kind of showing this. I showed this chart early last week, this potential 1-2-1-2, 3, 4, 3. You know, we get a pullback here anytime, but looking to be like a 4, then a 5 up again. And here's a 15-minute chart, just keeping it simple. You can monitor this trend line, this uptrend line we've been in. Okay, here's your next demand zone, this little boxed area. Okay. Moving on to the triple Qs, chart number 21, here's the triple Qs high performance daily KISS system. Now on here, the smart trailing stop jumped from 492.40 to 503.32. So nice 11-point jump there for the trailing stop. I love seeing that. But we also have a DeMark 9 today, just like we did on the S&P. Now notice on the Qs, we didn't get a lot of these DeMark 913 combos like we had in the S&P. We had one back here in May, but otherwise all the other peaks have been DeMark 9, DeMark 9, DeMark 9, and we have one today. So that definitely has my attention here short term. But it's nice to see that smart trailing stop moving up to protect the profits of the system. Okay. If you don't know what DeMark is, I'm not going to go into it. It's a sequence. It's very popular and a lot of professionals use it. I'd suggest Google it and read about it. But the DeMark 9 and the 13 are your important numbers. Here's the intraday time frames. You can see the daily up here. And here's that half-day chart I discussed in the beginning of the video where price was ping-ponging between the cycles and it broke out on Monday through the cycle. Again, ATR is supporting all the time frames. You can see we are getting a bit stretched. You can see how wide the ribbon's getting again. When the ribbons get too wide, like you see here, you have mean reversion pullbacks to work that off. Next, chart number 23, here's a clean daily S&P chart, just showing this uptrend channel that we're in. Okay, we are making a new all-time high here. There is a little MACD divergence, but again, the trend is up for now, and we are in the holidays. Driver 24, here's another way to draw the cues, potential wedge pattern. Last week we were at the bottom of the wedge, so it looked like we had another pop higher. So now we'll see, do we stall at this trend line or not? You can count one, as far as waves, you can count 1, 2, 3, 4, and this being some sort of 5. Chart 25, here's a 60-minute view. There is an open gap here, so next pullback, that could be a little magnet to fill. Otherwise, again, we're uptrending here. There is, on the positive side, there's no MAC to divergence. If you look at that, you can see that last consolidation was a simple ABC. Also, here's a great example of the moving averages. Like I said, when they get too wide, that tells me something. Also, when they pinch like this, that's also sets up a really good trade signal. It usually produces strong moves, as that did. And chart 26, here's a 5-minute view of the cues. I'm just showing this from educational. So these demand zones, supply zones we show a lot of times. So this was generated when the cues made a new high here. It's a break in structure, then a pullback, and then a move higher. That sets up your demand zone. And you could see how during that chop yesterday, price pulled into the demand zone where it found support. Steve and I do a lot of trades around the supply and demand zones. Okay, we look to buy demand zones, we look to sell supply zones. Next, chart 27, here's IWM small caps, which have lagged this week, but they're still holding that 9 EMA here. So we'll see if they can flag off of here or not. Of course, you got a beautiful opportunity to buy the back test of that ascending triangle. That was a really low risk trade from a couple weeks ago. And chart 28, here's a 2-hour view. It's still coiling here, so let's see if this can pop higher again or not. All right, so nice coiling action here. And that does it for the indexes, guys. All right, moving on. Chart 29, here's the VIX. Now, the one thing that has my attention here just today is the VIX was up 1.1% today, while the S&P was up 0.6% today. Usually they're both not up on the same day. Usually if the S&P is up, the VIX is down, or the S&P is down, the VIX is up. So when they're both up, it's rare, and sometimes you get a little market reversal after that, so be aware of that. Again, plus the Bollinger Bands are pinching here, and the VIX is testing the lower portion of the Bollinger Bands. Okay. Next, chart 30, here's the 60-minute chart of the VIX. We've been pointing out this MACD divergence that's been setting up, kind of a wedge-like pattern. You can see it breaking out of that wedge, so just be aware of that, guys. And now tonight, futures are down a little bit. ES futures down about 5 points. Again, that's not much. It's minor, but again, obviously that can change overnight. Again, big news item on Friday, especially with the jobs report, and we have initial jobless claims tomorrow. Moving on to the bond market, chart 31, here's the 10-year Treasury yield. So, as I pointed out last time, it's right around this 50-day moving average. Initial bounce there, sold off today. This is an important zone. If it breaks this would have a decline in rates, and that would likely help the market a bit, but still hanging around this area. Chart 32, here's TLT 20-year bonds. Remember, bonds move opposite to yields, so big rebound today. All right, you can see we had that nice bottom back in November, mid-November, from that MACD divergence we pointed out. And at the time, I pointed out this TMF trade because I pointed out the clear 5 waves you had with the MACD divergence. And this produced a great trade. Again, I understand if you took profits here around the 50-day moving average, but nice rebound today right off that 9 EMA. If you're still long, I just put a stop right at today's lows. And here's the 2-hour view of TMF. Like I said, we had that breakaway gap the previous week out of that bottoming pattern, break in symmetry. It looked like it was flagging on the 2-hour, and then it's popped today. And finally, chart 35, here's high yield corporate bonds. Market tends to follow this, and this continues to be in a steady uptrend. Okay. All right, moving on to the market sectors. Going to just look at a few of them. Here's XLK Technology. Again, that is what's led this week, clearly. Again, potential wedge here, but nice rally off the bottom of the wedge from last week. Now we'll see if what it does at the top of this range. Chart 37, here's semiconductors, SOX. They did hold this demand zone for now. Okay. prices slightly above these moving averages. Now we'll see if this can build or not. By the way, the high performance KISS system went long SMH today. That's the semiconductor ETF. Chapter 38, here's IYT Transports. They've pulled back recently. They've been in a really nice uptrend here. But again, little doji candlestick today, hammer-like candlestick. Still holding that support. We'll see if they can try to rally from here. Chapter 39, financials. They've been weaker, but again, not surprising, guys. They've been on a tear. They were quite overbought, so working off a little bit of that. You can see how the MACD crossed the other day. We're now testing the 20-day moving average. Chapter 40, here's banks. They've been weakening too, but again, they've had a heck of a run from this ascending triangle pattern that I pointed out back in October. You can see the recent high at a MACD divergence, RSI divergence. Chapter 41, here's biotech. Little bull trap back here, which we talked about. Dump, nice dump there, likely on that Robert Kennedy nomination. Then they've bounced back here. So far, they could be trying to flag here. We'll see. And the energy market's been weak here. Here's XLE. But again, guys, not surprised to see the pullback on XLE. I mean, look, it was at the top of this range, right? So logical for it to pull back here. Plus, crude oil's been weak, all right? That said, I added some fibs. You can see the low today tested the 61 fib. There's also an open gap down here that could be a magnet. But we need to see crude oil start to strengthen for this area to recover. But again, just logical pullback from the top of that range. All right, moving on to commodities. Chart 43, here's DBC. That's the ETF. And it's down. It's still in this overall downtrend channel. Chart 44, here's the weekly chart. Like I said, I like to show this. You can see they've been in this range here for a couple years now. Chart 45, here's crude oil. I drew this diamond pattern last week, and it is still a valid pattern. We're still in the range. Again, we'll see which way we break out of this diamond. Chart 46, here's copper. This is the weekly chart, up 1.5% for the week. There's been a lot of chop consolidation this year, as you can see, since the May highs. Chart 47, here's DBA. DBA's had a nice move. Pulled back this week a little bit, slight bounce today. Chart 48, here's Bitcoin. So Bitcoin had a nice pop today. I drew a little ascending triangle here. What I didn't know the other day is if we had a little B lower high and pull back here and a C then rally, or we just rally up now. Remember, I've been looking to test at least that 100,000 round number. We got close the previous week, right, to 99,800, but we didn't hit 100,000 technically, and we need to hit that psychologically. I'm telling you, market loves round numbers. It really does. So, you know, this is a little bullish pattern. We'll see if we can pop out through there. Again, there's various ETFs if you don't own Bitcoin itself, like IBIT, BITX, stuff like that. They obviously look the same. And chart 50, here's Bitcoin on the weekly. It's like I said, we're still looking for that 100,000 number. The very bullish view would be this is a wave 3 up here. Otherwise, we've been looking at this as a wave 5. We called that wave 4 bottom back in July in that weekly demand zone, and that played out perfectly. All right, moving on. Here's the US dollar. Again, a slight pullback today. Still holding this steep uptrend line. Again, hell of a rally we had out of that falling wedge with MACD divergence. As I stated last time, from an educational standpoint, and again, these newsletters are educational because we point out a lot of technical things to you guys. Whenever you have 5 waves like this, 1, 2, 3, 4, 5, a true 5th wave pattern always has MACD divergence. If you don't have MACD divergence, it's likely you're in a 3 instead of a 5, okay? Just one thing I've learned, I don't think that is covered really in a technical analysis book, so I'm just giving you things that I have learned. Chart 52, here's the weekly view. For now, after that pullback, it's trying to find a little support of this broken trend line here. Obviously, a hell of a rally off that big support, you know, from a couple months ago. And finally, chart 53, here's FXY. That's the Japanese yen. Remember, I pointed out that 5th wave low, and you could see, what did the 5th wave low had? MACD divergence. Pointed that out a couple weeks ago as a long opportunity, and it did give you a trade. It'll pull back today, though. Moving to precious metals, here's gold, which was up slightly today. Overall, I think it's still in this consolidation pattern. I'm still favoring some sort of wave C, But again, once that is done, I think gold will be off to the races again. But I still think it's in a big consolidation here. Needs to work off that big move it had at 2,800. My long-term target is over 3,000, as I've always stated. Chart 55, here's the other chart of gold. Like I said, this is the count we've been favoring. That last high is a wave 5 of 3. And we're in this ABC consolidation. I'd love to see this wave C move down for that wave 4. That would be my big buying opportunity to load the truck again on gold. Chart 58 or 6, here's the weekly chart. You can see how gold launched out of that big base early this year. Hell of a rally this year. Chart 57, here's silver. Rebounding here a little bit. Testing the 50-day moving average again. And of course, my big picture view in silver. Once we're in over this consolidation, I expect it much, much higher prices over time. You can see how it broke out of this 4-year coil early this year. Chart 59, here's GDX. This is the miners. GDX came down to its 50% fib, 200-day moving average a couple weeks ago. Bounced up. Still consolidating here. I'm still hoping it can have one more little pop-up here, but then I'm looking for another decline. Chart 60, here's the 2-hour view. So why am I looking for maybe one more move? We did have a symmetry break on the upside. I can see an ABC 3-wave pullback. We'll see if we can get one more pop. But again, even if we get another pop up in here, guys, I view that ultimately to form a lower high. Okay, I don't view this going back to new highs at this point. And guys, let's move to the final part of the newsletter covering our actionable trade ideas. Here's CN. Steve Nelson had it in his newsletter last night. Had a nice little coil-like pattern here, finding support at the 20 and 9 EMAs. Breaking through the downtrend line today for a nice trade on a pickup and volume. Chart 62, here's Roku. I had it in my long ideas for Monday. Well, it popped today. Even if you bought the gap up, you had a nice trade. And if you zoom out to a weekly chart, which I don't have here, this has a nice base. Chart 63, CAH, Cardinal Health. Steve, new idea from Steve last night. Little ascending triangle there. Little flag type pattern. Popped up through there today. Gave you a trade. Chart 64, TTD, Trade Desk. Also has been a nice trade. Popping through that resistance a couple days ago. Chart 65, EEM. That's emerging markets. Steve Nelson had this as a long idea in our newsletter last night. Nice little clean level. Slight pop today. If you're long, maybe a swing stop could go maybe around just below the 200-day moving average. You can see the little MACD divergence down there. Chart 66, Reddit. Another nice pop. Steve had this last night as one of his ideas. Nice pop there. Chart 67, NVTS. This has had a nice pop as well. This is one of my long ideas from last weekend. Nice pop today. Hope, went over the 200-day moving average if you're lucky enough to take some profits there before pulling back. Chart 68, Datadog. Long idea from ours a couple weeks. Like we say here, go doggy. And that doggy continues to be a very good dog. Huge update today. I said the other day it was bull flagging. Well, that played out beautifully. Hope some of you still stayed in this. No MACD divergence. Look at the volume. Great example of a breakout from a consolidation pattern. Chart 69, EB, Everbright. This is the long idea I showed on Monday. Slight pop the last couple days. Hasn't really powered here, but it still looks okay if you're long. Just have a stop in place. Chart 70, ALXO, another one. Still monitoring. This is a low price stock. They did break a downtrend line here. Still monitoring this one. Chart 71, Verve, another one. Broke out of a nice trend line base. It's pulling back. Now watch to see if it can find support right around the broken trend line. You could get a low risk entry there. Some of these weekly charts have done well. AFRM, remember, came out of this long-term base I showed just a few weeks back. My target area would be up here around $95 to $105, that supply zone. Chart 73, BLND, another weekly chart, big saucer bottom. Here's your supply zone way up there. Chart 74, TK, this is a shipper. Now this had a special dividend, went ex-dividend yesterday. Unfortunately, if you bought it yesterday, nice pullback today. That happens a lot of times if you buy before the on the ex dividend, the day before the ex dividend date. Because so anyway, we'll see if it can hold this support area. But the tankers have been really in the tanker, pun intended. Here's another tanker, little low priced one. Here, little resistance right around 441.80 if it can take that out. Again, these have really been in the tank. Jabber 76 UIS, one idea of mine from the last newsletter. Trying to pop here. We'll see if it can power through that resistance. And Jabber 77 PLL, it's a lithium play. It's been on our watch list for a few weeks now. Hasn't popped. It's just been consolidating sideways here. Really boring, just kind of monitoring. Eventually, I think it's going to pop up. If it does, target area would be up around here, close to 19. All right, guys, that does it for the newsletter tonight. Let me do a quick check on futures here. ES futures are down about 6 points. Gold is down 4 points. So we'll see where things end up tomorrow. Again, appreciate all the support here. And we'll see what the news looks like tomorrow. And, of course, the jobs data on Friday. Take care.